Welcome back. It has been another crazy week in the market. We have tons of news and things going on and updates. Earnings week also, or earnings season kind of just started. We had Bank of America report earnings on Tuesday. We'll cover that. It's super important to hear what the banks are saying, especially during these turbulent times, so we can actually get some insight into how the consumer is doing and feeling and, all of that. On Wednesday, we had ASML, a company that I own, report earnings. We'll also cover that. Some other notable earnings on Thursday, we had TSMC, Netflix down here. Next week, we have Tesla on Tuesday and Google, a company that I recently started buying on Thursday. And the week after that is a really big one. So on Tuesday, we have Amazon, Coca-Cola, Spotify, S&P Global, all interesting companies. We have Visa, Booking Holdings. Then here we have Microsoft and Meta, obviously massive companies. MasterCard, I'm interested in listening to that one. Apple, obviously super important. So yeah, and then after that we have some Trump tariff updates. He claims to be making progress with China, so we'll take a look at that. I'll show you some clips from that interview. It's super important to pay attention to. We also have this interview with Jerome Powell, which pissed Trump off, to be honest. We'll talk about, Trump is now calling for Jerome Powell to resign, and they're looking into legal ways to have him fired. So we'll take a look at this interview, see what he said. We also have news that Bill Ackman bought Hertz and now has a significant stake in the company. And Hertz is a company that's, been on the verge of going bankrupt for I don't know how many years now. But Bill Ackman is suggesting a Hertz Uber partnership. Obviously, I own Uber, so I'm interested in hearing and seeing what they're talking about here. And we have some updates in Google. Google ruled an ad tech monopolist by federal judge. So take a look at that, what that means for the company moving forward, what I'm doing with my shares, and so on. And of course, at the end, we're going to go over my portfolio, what I bought this week. I buy stocks every single week, and kind of how I'm feeling about the rest of the year at this point. Okay, starting with the Bank of America earnings call. As you can see right here, this was actually a pretty good quarter for Bank of America. They beat revenue by 1.45% and beat earnings by 10%. Now, while I'm not really interested in owning Bank of America at all, it is, as I said, important to listen to what they have to say because they have so much insight into what the consumer is doing and how the consumer is feeling through the numbers, the spending and all that. And in the past couple of weeks, there's been a lot of uncertainty, a lot of, bad sentiment from both consumers and investors out there. So we're going to take a look at what the numbers actually say. To summarize what was said on the call, essentially, despite all the concerns over tariffs, both by consumers and by investors, the Bank of America CEO essentially emphasized that the US economy remains strong. People continue to spend. He did acknowledge that there are certain retailers and certain sectors that are experiencing slower sales due to tariff issues, but overall consumer spending continues to grow essentially. And then you got to ask yourself the question, is that slow consumer spending in some areas because of actual trouble, or is it just people being cautious and all the uncertainty, they don't know how much they want to spend, they want to keep some money on the sideline, for security and whatever. Another interesting thing that they mentioned during the call is that they do not expect a recession in 2025. The Bank of America CEO said that although the probability of a mild recession has increased, across the investment community, Bank of America essentially remains optimistic because of one, consumer spending, and two, strong business performance. Now, their research team did slightly lower the GDP growth estimate, but they still expect the economy to grow. And lastly, they talked a little bit about the Fed And essentially, they do not expect the Federal Reserve to cut interest rates in 2025. And I think that's what the market has been looking for. The market sees that as positive, lower interest rates, more business spending, more confidence in the economy, more growth, right? But they don't expect any interest rate cuts in 2025. So with all that said, I think it's important to remember that, the market is currently freaking out over something that isn't yet a reality. And we've seen how quickly things can change and how quickly tariffs can go away. And as I've been saying for a long time, I really don't buy the whole Trump doesn't care about the market. We've seen in the past 1 or 2 weeks, when approval of him as a president drops, he's quick to, change course. That's why I just continue to buy the dip. I'm happy to get these stocks at lower prices, and I'll continue to do so for as long as this lasts, essentially. Then on Thursday, we had ASML earnings. As you can see here, they actually missed on revenue by 3.5%, but beat earnings by 3%. In my opinion, it was an okay quarter for ASML, pretty much business as usual. But investors were not happy that they missed order expectations. And this is what they're talking about. If we take a look at net bookings here, you can see that last quarter, they reported 7 billion net bookings. And this quarter, they came in lower than expected at 3.9 billion when 4 point something billion was expected. But the CEO noted that this fluctuates so much and their clients will come in with huge orders. And then it can take a couple quarters even as they digest that and get approval for further spending and so on. So they even find it very hard to predict and give guidance on this metric. So he said the order book is not a good measure of how companies are feeling about tariffs or how the economy is looking or future outlook, essentially. What they did mention, though, was that they still see AI as a significant driver for the overall recovery of the industry. But other sectors like mobile, PC, and automotive are recovering more slowly than anticipated. And it's that overall slow recovery that has led their customers to be more cautious and even delaying investments and pushing out plans for new facilities. And as this article here says, the CEO warns of economic uncertainty. Now, listening to the earnings call, this was nothing like super dramatic. This headline sounds kind of dramatic, but essentially he just said that the company acknowledges that with the recent tariff announcements, there is definitely increasing uncertainty. But once again, they're not really seeing that in their numbers or in their conversations with their customers. And with regards to how tariffs might directly impact ASML, their CFO during the earnings call basically said that the company plans to pass most of those tariff costs straight onto their customers, especially in the US. And that's simply because some of the free trade zones could mitigate some of the tariff impacts. And lastly, I figured I would just show you in the transcripts what I was talking about earlier. Here, the CEO says, I think order volatility and the lumpiness of order intake is what we've seen, not just in this environment, but what we've seen in the past couple of years. And that is, I think, first and foremost, driven by the fact that a customer puts in a very, very significant order in one quarter, has to go through a lot of governance steps in order to get that order approved, and is therefore unlikely to then the quarter after come back. So to the extent that you have major order intake as we had it, for instance, in Q4, that has a bearing on the order intake basically in the quarter after. But overall, if we look past all the tariff questions that they got, they're advancing very well in their technology. There was a question about China developing EUV machines. EUV is that technology that only they can make. They didn't necessarily brush it off, but they said that what they have seen so far makes them think that there's no real product coming out in the next couple years. And they think that China is still multiple years behind in this technology. So I'm kind of glad that this quarter wasn't seen as positive because I just have more time to buy more of this stock. And what I'm thinking about here is just the overall trend of this business and the importance they're going to play in the coming years and the coming decades with the boost in AI and autonomous vehicles and autonomous this and that. As I've said before, I truly think this is going to be a once in a generational buying opportunity for this technology. It's going to transform how we see the world. And all of these chips are going to go through ASML machines. And the world is going to need more and more and more of them. So now we're getting this pretty monopolistic company at just a 24 forward PE, which when you have this much market share and this much of a, competitive advantage or moat, that is super cheap in my eyes. And if we look down here, you can see that the company is using this opportunity to buy back billions of dollars worth of shares. They bought back almost $3 billion worth of stock this quarter. Moving on, this week we got more news from the whole Trump tariff situation. He did this interview on Thursday, so let's, have a look at what he says.
Say that. It's just not appropriate.
But you're speaking. Sorry, has he called you directly, President Xi, or reached out to try to facilitate a conversation?
Well, you'd think it was pretty obvious that he has, but we will talk about that soon. It's not that important because honestly, we're going to have a deal. I believe we're going to have a deal with China. And if we don't, we're going to have a deal anyway because we're going to set a certain target and that's going to be it.
So as I've been saying, tariffs are already short-term in nature. If you look out the next couple of years, but if they actually do manage to land a deal with China here, we've seen all the other countries, how they responded. And I think I saw reports of 130 countries in talks with the US over potential tariff deals. And he went ahead and paused all those tariffs for 90 days? China was really the first country and the only country to immediately retaliate. So he kept on the pressure on China. But yeah, as I said, this was already short-term in nature if we look at a couple of years. But this just goes to show you never know what's going to happen in the short term. And as long-term investors, we need to welcome the uncertainty and the volatility. And as long as we're buying companies that are strong, have strong business models, have strong balance sheets, a bunch of cash to pretty much get through whatever we go through in the market and come out stronger than their competitors, then we're good to go. Let's think about some of the tech companies. Let's think about Amazon. Let's think about Microsoft, Meta. If you look at those companies today, were you ever in doubt that they weren't going to make it through whatever was being thrown at them? And how far did they fall in 22? Some of those stocks have 5x'd since then. So that just shows you the market can be irrational, both going up and going down. And as a long-term investor, you just have to take advantage. Every crash in the history of the stock market has been a buying opportunity. So, I welcome more uncertainty for the rest of the year. I'm going to keep buying. And moving on, we also had this interview with Jerome Powell on Wednesday. And this interview really set Trump off. And he called for Jerome Powell's resignation, said that, him retiring couldn't come soon enough or whatever. So we're going to take a look at this, see what Jerome Powell has to say. It's actually pretty interesting to hear how he sees all these tariffs and what that could do for the economy. But also investors were kind of scared because it's not often that we see the Federal Reserve Chair talk so, not negatively about the economy, but that everything's up in the air and there's uncertainty. So let's take a look.
Well, let me turn to financial markets. We've seen some volatility, especially stock market volatility. The levels of the VIX are up to the levels they were in the early days of the pandemic, coming off somewhat now. Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing.
And this is what the professionals, the Wall Street analysts have been talking about for weeks and months now, is if tariffs are going to cause uncertainty, stock market's going to crash. It's been like talked about like it's a certain that the Federal Reserve is going to step in and cut interest rates to get, boost the economy, stimulate growth, essentially.
What's going on. And, it's really the policies, particularly the trade policy. And really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning. Conditional on being in such a challenging situation, markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
So we've seen volatility also in the bond market. And at a time when usually there's a flight to safety, we saw yields on the German Bund and the Japanese government bond come down, but we saw yields on US Treasuries go up. What do you attribute this to?
So I would just say the same thing. I think it's very hard to know in real time. I've had a lot of experience with significant moves, for example, in the bond market, where there's a narrative that people land on, and then 2 months later you look back and go, that was completely wrong. So I think it's very premature to say exactly what's going on. Clearly, there's some delevering going on among hedge funds in levered trades and things like that. It's also, again, it's the markets processing historically unique developments, and with great uncertainty. And I think you'll probably see continued volatility. But I wouldn't try to be definitive about exactly what's causing that. I would just say markets are orderly and they're functioning kind of as you would expect them to in this time of high uncertainty.
So the Fed, in its last meeting, slowed the pace of shrinking of its balance sheet. Was this driven by uncertainty about how much reserves and liquidity the market needed, and you wanted to take a little more time to find that out? And flip side, you said the market was orderly. What if market disruptions emerge? Would the Fed intervene?
So we think that reserves are still abundant. So we don't think we're close to the point, particularly close to the point where we would stop. But we were facing a situation in which, for other reasons, there were going to be big flows into and out of reserves, as it had to do with the debt ceiling and the Treasury General account. For those of you who are Treasury market people, that'll make sense. But while those big flows are happening for over a period of 6 months, we would actually be shielded from being able to see evidence that we were or were not getting close to the level of less abundant reserves. And so we decided to slow the pace. We thought about pausing, and instead we debated it. It's one of these great debates that we have at the FOMC. We decided to slow the pace instead. And people really came to see the merits of that because, the slower we go, the less, the smaller the balance sheet can get without disruptions. And we want that process to continue, and now it's at quite a slow pace. So we think that's a really good thing. So that means it can go on for a longer amount of time, and we'll be able to reach kind of very carefully what we think is the right level of reserves. Still plenty of reserves.
What about the international dollar-based system? With all these disruptions, do you stand ready to supply dollars to central banks as you've done in the past when there's been a global shortage of dollars?
Sure, absolutely we do. Just for everyone's knowledge, we have standing dollar swap lines with 5 large central banks, and they go to the jurisdictions where there are big overseas dollar funding markets. And in fact, those are overseas markets where, for example, a European or Asian institution is buying an asset-backed security that is backed by loans to American consumers. So in effect, these are loans to American consumers, and we support that. We want to make sure that dollars are available. They need dollar funding to hold those dollar assets. So the way it works is, when needed, We lend to the central bank in dollars, and they pay us back in dollars. They then pay in their currency. They lend on in dollars, and so we take no credit risk or anything like that. And it supports dollar funding markets. Dollar funding markets are very sensitive during times of crisis, and it's very helpful. The reason we do it is it's really good for U.S. Consumers. So we'll continue to do that, just as part of the dollar being a reserve currency, the reserve currency, most important.
So that was the interview that led Trump to say this. Trump blasts Fed Chair Powell, saying his, quote, termination cannot come fast enough. If we go down here, Jerome Powell of the Fed, or quote, Jerome Powell of the Fed, who is always too late and wrong, which I think is a valid argument. I think it's widely known that the Federal Reserve is always too late in either hiking interest rates or cutting interest rates, and largely because they look at such outdated data. Their data is always lagging a little bit behind. But essentially, he says, yesterday issued a report which was another atypical, complete, quote, mess, Trump wrote. Quote, Powell's termination cannot come fast enough. His comments came after Powell on Wednesday said at an event in Chicago that the Trump administration has brought, quote, very fundamental policy changes, including sweeping tariffs that are, quote, significantly larger than anticipated. He said such changes are unlike anything seen in modern history, putting the Fed in uncharted waters and on a path to confront a challenge it hasn't seen in decades. But Powell's words weren't unlike those of other Fed officials in recent weeks. Most have said Trump's tariffs are likely to push up inflation and unemployment. Now, if we tie this in with what we just heard from Bank of America, that consumers are steady, sure, maybe it's too early to see how tariffs are going to impact, but those results from Bank of America, they're going to show up in the data that the Fed looks at. And if the economy and the consumer is holding up pretty well, you know, regardless of rates being somewhat elevated, you know, likely they're not going to cut interest rates because they want to lower inflation and get it to that 2% mark, right? If they start lowering too soon, we might get another, you know, round of inflation, especially if the consumer is already doing pretty well during all of this. But as far as I understand it, the administration has no power over firing Jerome Powell, and he intends to stay until his term is up in like the middle of 2026. So that being said, I think it's likely that it's going to be maybe until next year until we get some rate cuts. But maybe if this tariff situation is settled and we can get a deal with China, some of that uncertainty is, you know, out of the way. I think we were on a good path with both the inflation data that the Federal Reserve looks at and the trueflation data that's kind of more up to date. Trueflation is still very low. So if that uncertainty can go away, maybe we can see rate cuts sooner. Okay, moving on. We also got this news that Pershing Square CEO Bill Ackman, an investor that I follow and look up to, suggests Hertz and Uber partnership on autonomous vehicles. The article goes on to say Pershing Square CEO Bill Ackman, who disclosed in a Thursday post on X that the firm owns a 19.8% stake in Hertz, said in the post that Hertz and Uber would be ideal partners to roll out a fleet of autonomous vehicles, calling the idea a fun thought experiment. Ackman said in the post that such a partnership would bring together Hertz's fleet of 500,000 vehicles, expertise in vehicle maintenance, and 11,200 locations globally with Uber's ability to improve the utilization and profitability of that fleet. Come to think of it, I'm going to call Uber CEO Dara, Ackman said in a post. And in response to that, Dara said, Hertz has been a great partner of ours, excited to brainstorm on how we can expand on our relationship. So obviously this is interesting news for me because I own Uber. And recently there's been a lot of uncertainty around Tesla and Waymo disrupting Uber, right? I think there are going to be plenty of players that they're going to partner with Uber. So that's kind of been my thesis and why I've been buying at a pretty low valuation historically. But this is another avenue that they can go down, partnering with someone like Hertz, because that's going to be a big issue for, let's say, Google. Are they going to build out that infrastructure, the maintenance, and the employees to take care of the vehicles, clean them, maintain them, and so on? Probably not. Tesla can probably do it because they have Tesla service centers all over. But if Uber can bring that to other autonomous vehicle providers, bring that service and just partner with them, or if they even just own a fleet of their own, own the physical vehicles, partnering with someone like Hertz with exactly that expertise in maintaining, and they have a ton of locations globally. As I said, it's another avenue to go down. And overall, with Uber, I've just seen so many good news come out in the past couple of weeks. The CEO is still determined and, positive about everything. But overall, I'm just excited about the future of Uber. Moving on, and the last piece of news today, Google ruled an ad tech monopolist by a federal judge. Let's look at this CNBC segment and hear what they have to say.
Dipping after a federal judge ruled that it holds an illegal monopoly in some online advertising markets. Deirdre Bosa digging into what it means for the tech giant in today's Tech Check. Some more antitrust problems for Google.
More antitrust, and so you would be forgiven for losing track of all the different lawsuits and pressures that Google is facing. It is a lot. The latest ruling to come down, it centers on the ad tech case, and it opens the door for a forced breakup of Google's ad business, something regulators have been after for years. Now, ads, of course, still very much the bread and butter of Alphabet, making up some 75% of total revenue. So breaking up the ad tech stack, that represents a direct threat to the financial foundation of the company itself. Now, Google in a statement says, quote, "We disagree with the court's decision regarding our publisher tools. Publishers have many options, and they choose Google because our ad tech tools are simple, affordable, and effective." But key here, this is now the second active case where U.S. courts could force Google to sell off key assets. Next week, the remedy trial gets underway in the online search case where the DOJ is pushing for a breakup of Google's Chrome browser, key to its ecosystem. Now, it's not just the U.S. coming for Google either. It's Europe, China, Japan. They have all opened up cases, making the pressure global and the stakes even higher. To be sure, it will take months, potentially years, for remedies or fines to flow through. But something we often talk about is that regulatory scrutiny, it diverts resources, talent, attention away from the core, like we saw Microsoft decades ago. And Google's core right now is a once-in-a-generation opportunity, artificial intelligence. Google is still seen as playing catch-up, and the race is only speeding up. A bright spot, perhaps, though, is that Google has notched a number of wins in recent months with Gemini and its different integrations. It doesn't seem like regulation has thrown off its focus quite yet. Valuation, though, that's another story. Google still holds the lowest earnings multiple of the Mag 7. Investors seeing regulatory threat as very real, and that makes an impact. In fact, tech is not getting any kind of regulatory break in the second Trump administration, as many had hoped. We talked about this last hour. FTC versus Meta, that's moving forward, threatening to split off Instagram and WhatsApp. Guys, the charm offensive from mega cap CEOs leading up to the second Trump administration hasn't exactly worked out. Sundar Pichai, he dined at Mar-a-Lago. He had a front row seat at the inauguration. Its proximity is not bringing protection, at least.
So a couple things to break down. If you started buying Google recently, like myself, I think I started buying 2 weeks ago now. Google is such a good company that it's currently trading at such a low valuation. So a lot of this risk is already priced into the stock. But also, just a reminder, these cases, Google is, appealing them. So they're likely going to be in court for years, 3, 4, 5 years. And another reminder that Google, Meta, Microsoft, Apple, Amazon, and a bunch of others have all constantly been challenged in court over these antitrust and monopoly related cases. And all of those were, related to acquisitions, anti-competitive practices, Google here is saying that they disagree. They say there are plenty of options out there. People just choose their tools. And the same with Chrome. It's the same argument that they have. Sure, they're being defaulted in a lot of places, but they say that essentially people choose Chrome. And I know for myself, at least, when I get a new computer, the first thing I do is download Chrome. It's what I do almost immediately. But back to the point, these companies go through these cases almost every single year, and they're fined and bothered by different regulators. But look at their stock prices. These are just, these fines and punishments are road bumps for these companies. Now, if Google has to end up, selling off parts of their business, that will definitely hurt them. But just keep in mind, where is Google's business going to be at that point in 3 or 4 years when these cases are solved? How much will the company have compounded? What is it going to be worth then? How much will these parts of their business be worth at that point? I mean, we have cloud growing rapidly. Maybe Waymo at that point is offering rides everywhere. So for now, I'm monitoring all these situations. But when you own these big dominant companies, there's always going to be legal trouble. And on top of that, investors tend to forget about these cases really quickly. That's been the case in the past. Let's see if that's the case again now. Okay, lastly, what I bought this week. I bought one company, and it's another brand new company. That company is Robinhood. So I bought, very small position, $500 so far. I brought up Robinhood a couple weeks ago when I was talking about, the Tesla, Palantir, HIMS, Robinhood, all those very popular stocks that were reaching incredible valuations. And I mentioned, in February when the market started crashing, I said, actually, I listened to the last Robinhood earnings call, reviewed their numbers, how they were doing, and I was very impressed. In February, when everything crashed, Robinhood crashed a lot, and it actually reached pretty nice valuations, in my opinion. And just like SoFi, I obviously own SoFi, Robinhood is another company that is doing so well with capturing the younger generation and capturing, just new members in general. And obviously, I use Robinhood. As you can see, I'm a gold member, which is, you get all these benefits. And they've been doing all these events, which I'm honestly very impressed with. Everyone's focused on Trump tariffs right now. But what about the other initiatives or goals that he had, like lower regulation and a more beneficial environment for crypto? And in that last earnings call from Robinhood, crypto was a massive revenue generator for them. I'll probably be releasing a whole video going over Robinhood because, as long as they stay around these prices, yeah, they went all the way up to $65 a share, came back down to 30 something, and now they're sitting at around 40. At these valuations, I think the company is a buy. And moving forward, especially with the reduced regulation, they're so aggressive. They want to, touch every dollar that you interact with, that you use and spend. And the management team of a company is important. If the lower regulation does allow them to make some big moves, I want to be there for it. They're going to be disruptive, and it's going to be a fun ride. But again, more on that later. I'll probably release a whole video on my whole thesis on Robinhood. But that'll be it for this video. See you in the next one.